Welcome to the Runway, where we cover current events in crypto, Web3, and tech. Today's Runway covers Fidelity's crypto caution, Robinhood considering relisting of Cardano, Solana, and Polygon, HSBC's digital leap into tokenization of securities and real-world assets, Bitcoin's fee spikes, and a couple interesting Twitter takes, commentary, and analysis. It's Wednesday, November 8th. Let's take off. First up here, we have part of Fidelity's risk disclosure when they filed their ETF. I think they went to acknowledge a couple potential risks that could materialize, black swan type situations, a risk in potentially Bitcoin's code. What they wrote here is Fidelity, the U.S. money management giant that's been involved in Bitcoin for almost a decade, but more recently is among the ranks of applicants to launch a Bitcoin spot exchange traded fund or ETF, published an article aiming to tackle persistent criticisms of the cryptocurrency while acknowledging some legitimate concerns. Those include the risk that a bug in Bitcoin's code could render it worthless, noting that bugs caused major problems in 2010 and 2013, according to the piece. While it cannot be ruled out that another bug or unintended consequence of an upgrade may happen, we do think the probability of such an event is much lower as the network has become more resilient and more developers continue to work on it over time. We think the probability is also lessened as the Bitcoin code is completely open source, so anyone from large companies to independent software engineers can view and test it. We also note that if another bug is discovered, it is likely that those with vested interest in large holdings of Bitcoin and equipment, miners, people running nodes, etc., will be incentivized to work together to quickly fix it. Nevertheless, we do think this is a criticism that is worthy of consideration, and investors should assign a non-zero chance to the possibility of a severe enough bug in the core Bitcoin network that could cause its value to decline, possibly precipitously. The beautiful part about open source technologies and open source code is that it's live, so anybody can read it, anybody can review it, anybody can look into it. And so far, there haven't been any catastrophic bugs or problems in the code. And the code is now been operating for 10 to 15 years, with the next block being published. Any bugs early on in the project that could potentially have any negative impacts were quickly found or patched by all of the core developers and people that were helping in the open source community at the project. So I think that Fidelity's piece is interesting, but I would say that I feel very confident that it's pretty much a zero possibility here, pretty close to zero, as close as you can get, that there's any catastrophic bugs in Bitcoin's code. And the beautiful part about the game theory is that there's people that own Bitcoin, that hold Bitcoin, owners in the protocol essentially. All of us that have exposure to Bitcoin have a piece of ownership in that protocol itself. It's kind of the beauty of Web3. We all have an incentive to fix or be a part of the solution for any potential problems. And this also goes for future potential problems like quantum computing that could potentially crack SHA-256 cryptography, which is what protects Bitcoin currently and protects the cryptography behind a private key pair that allows you to hold your Bitcoin, right? So the community would absolutely come together to update any problems. The core devs and the whole community would rally behind a situation like that for sure. Let's move on to our next story here. Robinhood's Tenev teases EU expansion, addresses relisting delisted tokens like Cardano, MATIC, and Solana. So we have an interesting little interview here. He acknowledged that while there has been stronger performance in these cryptocurrencies, the volume trends have remained relatively subdued both industry-wide and on the Robinhood platform. I think it's hard for me to speculate on activity predictions in the broader cryptocurrency market. We're focused on using this as an opportunity to build our capabilities, build the platform. You've heard me talk in this call about how we want to make sure customers who are using Robinhood for crypto know that they're getting terrific pricing. And so we've continued to make progress there, Tenev said. Tenev also mentioned that Robinhood's team is working on the launch of their services in the European Union, which is expected to significantly expand the market of customers they can serve. In response to another question about the delisting of certain crypto assets by Robinhood, Tenev emphasized that regulatory clarity plays a crucial role in decision-making. In June, the trading platform announced that it will cease support for 3 prominent cryptocurrencies, ADA, Polygon, and Solana. They were doing this because the SEC was taking their arbitrary and capricious actions against a lot of these protocols and projects. We just claim that everything is a security, and now we have case law or judicial backing saying that it's kind of, you can't just make a blanket statement like that, and everything needs to be evaluated based on its merits. Every cryptocurrency is essentially different, at the very least. John Todaro, principal crypto and blockchain research at Needham & Company, asked Tenev, what would give you comfortability to relist some? Is it some of these ongoing suits, maybe with Coinbase, that need to get resolved? Any clarity there? And I think Tenev responds here and echoes, what a lot of us sort of feel here, is that it's hard to say what specifically we're waiting for to give us comfort. I think that rules, rulemaking, court case data, that all helps. And of course, we'll continue to push for regulatory clarity, because I think it would be a shame for the innovation that we've been seeing in crypto is to be co-opted overseas. I think it's very, very important for the US to remain a leader in every new technology in the industry that we possibly can. Tenev respond. He hits the absolute nail on the head here. It's a shame that, all of this innovation and stuff could potentially be fleeing overseas. Developer talent, jobs, all of these things. The way things are currently going with the regulatory climate in the current administration, and the different sort of branches and cabinet, from the CFTC to the SEC to the the comptroller guy who was sort of doing the whole choke point 2.0 thing behind the scenes, after totally being losing in court during the administration. I can't remember the guy's name exactly, but they were doing similar things to companies they didn't necessarily agree with, and they basically got slapped down as total unconstitutional behavior by the court system. Now the guy is back in Biden's cabinet, doing similar things behind the scenes. We were a victim of it. We had a bank account that we basically told we were getting shut down, and essentially had to escalate the situation all the way to the vice president of the bank/credit union. Ultimately, they reversed the decision. We were in the middle of onboarding with another bank that was trying to onboard Web3 companies, and they shut us down in the middle of the onboarding process, basically saying that, the climate had changed and, there was some stuff going on behind the scenes, right? So this is totally, unconstitutional, unethical behavior by those people in power currently. Hopefully we see that stop soon. Let's continue to our next story. HSBC to offer tokenized securities custody service for institutions. HSBC, one of the world's largest banks, said it plans to start a digital assets custody service for institutional clients, focusing on tokenized securities in conjunction with Swiss crypto safekeeping specialist MATIC. Once live in 2024, the custody service will complement HSBC Orion, the London-based bank's platform for issuing digital assets, as well as a recently introduced offering for tokenized physical gold, HSBC said in a statement. Together, the platforms will form a complete digital asset offering for institutional clients, the bank said. Banks and financial institutions are bringing a range of real-world assets, RWAs, onto blockchains, both private ledgers and public networks like Ethereum, in a process known as tokenization. Last month, regulators in Singapore, Japan, the UK, and Switzerland said they will test tokenization for fixed income, foreign exchange, and asset management products. HSBC pointed out its custody plans for now involve tokenized securities issued on third-party platforms, e.g. private and or public blockchain-compatible tokenized bonds or tokenized structured products, not for a custody of cryptocurrencies or stablecoins. Very interesting here. I think this is a trend to watch, especially with real-world assets being tokenized and put onto blockchains. I think the transparency and the speed at which these assets can move, I think that it just is a clear match, and it just major efficiency gains. So we're going to see this trend sort of continue over the next decade in a major way. It also, kind of touches on the fact that, you see all these different countries that are being mentioned here, from, Singapore to London to, different banks, Japan, the UK, Switzerland. So we're seeing innovation happen in other governments and, companies abroad, really starting to, utilize these efficiency gains and take advantage of this new technology. And it's just sad to see the opposite happening here in the US. And instead of, working with these companies, outstanding companies and companies that are behaving ethically and doing the right thing, for example, Coinbase, our arbitrary and capricious SEC going after and suing these companies, wasting taxpayer dollars when, companies like Coinbase have just done a lot to move the industry forward and have always, operating in good faith. And, we're sort of seeing an attack on, a potential company that could create, trillions of tax revenue, hundreds of thousands of jobs over the next decade or so. Let's move on to our next story here. Bitcoin transaction fees reach 5-month high. Ordinals surpass 38 million inscriptions. So ordinals are kind of to sort of create NFTs on Bitcoin, where they basically inscribe a single Satoshi, and one Satoshi is essentially 100 millionth of a Bitcoin. They take that Satoshi and they assign this inscription to it, which is essentially almost like a JPEG or a photo actually on the on-chain and take up some of that precious Bitcoin block space with this ordinal. One of the reasons, we're seeing obviously article about Bitcoin, the open interest on the CME and the wallets with over $1,000 worth of Bitcoin at a record high. So you're seeing more, activity and interest in the space, and that's reflected on the blockchain, right? Different size transactions kind of shows all of this. And in real time, you can kind of see all these blocks that are falling. It sort of shows the network activity happening and occurring. And where these blocks are falling to is this thing called the mempool. This is what the mempool looks like here. You can kind of see this mempool of all these transactions waiting to be confirmed in the next block. When the next miner finds the next block, it'll be posted to the chain. So you can actually visualize this in real time, which is really, really cool. When the fees are going up means that there's more activity and more fundamental use of the network itself. That's being reflected in higher fees, which creates higher revenues for miners. And this website, bitfeed.live, we'll try to attach a link to this website in the show notes, but it'll give you kind of an idea so you can sort of visualize this and really see how the blockchain is operating and working in real time. Very, very cool. Satoshi House, let's give him a little shout out. It's pretty cool. Sponsored by Satoshi House. Let's take a look at some interesting Twitter takes and Twitter posts that I saw in the past day or so. Coin Bureau said, imagine a money laundering scandal that involved villas, luxury watches, Birkin bags, and bear bricks. That happened a few months ago where a gang of 12 people laundered over $2 billion in a small city state. Kind of wild. Interesting take here by Coin Bureau. There's always scams out there, and part of the beauty of freedom and liberty is that there's opportunities, and there's always going to be bad actors, right? Whether it be with penny stocks or crypto or stock market or, even in government, all over the place, there's always going to be grifters and scammers. And, you have to educate yourself and be aware of those scams, right? What we can do in the industry is constantly try to call out these scams. So, stuff that, like with Sam Bankman-Fried and all these characters, call out these scams when we see them and expose them and shine light on them, right? I think Caitlin Long, who's a advocate of the space, she always says, so she posted recently that sunlight is the best disinfectant. And she was exposing, corruption with what the Fed's doing and how they're arbitrarily deciding who can have a master account and all this sort of stuff, right? So this corruption exists across the board, right? Whether it's this guy in the comptroller who's going and telling banks not to work with Web3 companies, unconstitutionally, or, Sam Bankman-Fried thinking that he's some kind of narcissistic god, that he just knows everything. And, he decided that I can steal customers' funds and, I'm going to give them to, we're going to donate them to politicians because that's going to make the world a better place. Right. So, and in his mind, that's all justified, right? All of his behavior is just completely justified. The ends justify the means, right? But let's keep calling out these scams. If those of us that are in the space, let's shine sunlight on them. Next up I saw here was interesting. Paul Grewal posted this. The SEC filed their opposition to Binance's motion to dismiss. Once more, the SEC asserts that a virtually unlimited flexibility of the securities laws grants it complete authority over crypto exchanges. That misrepresents the law. Let's explore why. He kind of breaks this down. To start, the SEC may only regulate crypto exchanges if transactions in the digital assets on exchanges are investment contracts, and therefore securities under federal law. An absolute requirement of an investment contract, as defined by the Supreme Court in Howey, is a contractual right to the profits, income, or assets of a business enterprise. The SEC tries but fails to dispute that. They begin with a straw man that a formal contract is not required for an investment contract, but no one is arguing that wet signatures on paper are required. The SEC then claims that Howey does not require any contractual obligations by citing the cases involving contractual obligations, including Howey. Simply put, investment contracts require contractual obligations, as case law and common sense make clear. Finally, in arguing incorrectly that the major questions doctrine does not apply to crypto, did the SEC just admit that ETH is not a security? On page 47, the SEC says Bitcoin and ETH are the largest crypto assets in existence, but are not at issue here. This brief underscores why clarity from the courts is so important, and why it's equally important that Congress passed comprehensive crypto legislation in the US to put an end to these distortions. Couldn't agree more with Mr. Paul here. I think he's like the chief legal officer of Coinbase. I think he just lays it all out very clearly, very succinctly. Clear governmental overreach here by the SEC. Luckily, the three branches of government are sort of doing their job here. We have the judicial system pushing back strongly on this, and it looks like the SEC is losing constantly. They're basically getting destroyed here. Expect this to continue, and hopefully we can have a more collaborative approach with whatever the next SEC chair is. Our next take, Jameson Lopp has a cool post here. Bitcoin blows minds for many reasons. Computer scientists say Satoshi solving the Byzantine generals' problem blew their minds. Economists might be mystified by an asset that goes up in price without producers increasing production to increase supply. Oil drillers say finding an alternative to flaring excess gas that's cleaner and more profitable was mind-blowing. Human rights advocates say being able to own an asset which cannot be confiscated in a corrupt country, allowing people to grow wealth and escape tyranny, was mind-blowing. Power plant operators will say the load balancing capability of mining is mind-blowing. Merchants or users of remittance savings of services will say the fact that Bitcoin lowers friction and fees is mind-blowing. Some might say Bitcoin encouraging saving and long-term thinking is mind-blowing. If Bitcoin hasn't blown your mind, you just haven't viewed it through the right lens yet, right? So I encourage all of you, many of you may be involved in all sorts of different projects. If you haven't, all of, the different mind-blowing things behind Bitcoin's original creation and why we're all here in the first place, which is basically a decentralized global money. If you haven't looked under the hood and gone down the rabbit hole, as many say, I encourage you to absolutely do that and don't lose sight of how important and how crucial Bitcoin is. And yes, there will be other projects and other protocols and other things that are important as well, but none of them will really serve the role that sort of money that Bitcoin will for money. If you're new in this space or you're just seeing this video or you're an OG. It's always good to go back and really like study Bitcoin and study the history of cryptography and the history of money. It's really, really fascinating. And it's what brought people like myself here in the first place and why we're a part of this industry. Let's look at, I came across this post and just wanted to sort of show it here. Bombshell report on censorship industrial complex. Hundreds of secret reports show how DHS Govs and CISA Gov, the GEC, State Department, and Stanford and others worked together to censor Americans before the 2020 election, including true information, jokes, and opinions. Reporters like Matt Taibbi and Elon Musk sort of, opened up the Twitter files, and there's just been so much evidence of corruption and stuff that's been going on behind the scenes. This is just deeply troubling and really disgusting and worth a good read to really look at what's actually happening here, how the propaganda is going out and, censoring people's jokes and, opinions and actually, true facts. I mean, this is not what America was founded on. This is, this is not what the founding fathers of our country had intended. This is not a free society. This type of behavior, just needs to be squashed. Our tax dollars going to this. I mean, unbelievable, just disgusting. We kind of break it all down here. The EIP stakeholders would submit misinformation reports. I mean, this is so Orwellian. I mean, this is like, right, an episode right out of, Animal Farm or 1984. I mean, this is just crazy, just disgusting behavior. Worth a view and a listen. Finally, today, I want to just take a look at this because there's always a lot of Tether FUD out there. And I think Nick Carter succinctly sort of goes over this a little bit. There still remain otherwise serious people who in 2023 earnestly believe unbacked fake Tether issuance drives up the price of Bitcoin, despite no actual documented evidence of this ever. Tether surviving a brutal bear market when other major stablecoins collapsed and virtually every lender and several exchanges collapsed. Tether honoring massive redemption events. Tether settling with NYAG and providing 2 years of attestations to them without an issue. The Chinese commercial paper conspiracy being false. The Tether will collapse when Evergrande does. Theory being proven false. Evergrande collapsed. Tether didn't. Tether continuing to reduce the maturity and increase the liquidity of their assets. Multiple occasions of Tether supply and Bitcoin price going in totally different directions. Tether supply rallying while Bitcoin sold off. Impossible according to the theory. Bitcoin enduring a brutal bear market while Tether reached all-time highs. Tether securing and maintaining relationships with credible US-based intermediaries like Cantor. Tether containing their quarterly attestations like clockwork. It's time to admit that the truthers are wrong. You don't get an unlimited moral license to be intellectually short with absolutely no evidence in favor of your position. Yes, bad things could happen to Tether in the future, but regardless, the truthers have been wrong from 2017 to 2023, and everyone can agree on that. So I think he, raises tons of points here, and I think it's kind of time to move on from this issue. And, it's great to be skeptical in the space. It's always, I think skepticism should be, the de facto way to approach things. But at some point, I think it's important to just look at the facts of the situation. And looking at some of, Paulo Arduino, who's the CEO of Tether, some of his recent interviews, and just talking about where the company stands. And I mean, the massive interest rate increases, right? Because they're holding a lot of government debt. That's pretty much what's backing Tether. They're or commercial paper, and these kind of short-term money market funds are just printing, 5-6%, right? So if you've got, billions and billions and billions of dollars, hundreds of billions, 500 billion, whatever it may be, and you're getting like 5% on that, that's 25 billion a year, right? So I think right now they're saying they're making like $1 billion a month just based off of that interest they're getting from, government bonds. And it's a whole nother rabbit hole to go down of why governments, especially our government, should be encouraging stablecoins and helping stablecoins, because all that money is a buyer of government debt. It's a buyer of bonds, right? Which is essentially having that buying demand while we're losing it from other countries. Having that buying demand for blockchains and for Web3 is sort of adds new life to the treasury market in a very interesting way. Tether has, other assets now. They're investing their profits into Bitcoin. They're investing their profits into mining operations. And they've basically shown and proven, the attestations of having the goods, right? So I think it's time at this point to put that to bed. At least that's my opinion. And that's all I got for you guys today. So that's a wrap. Stay safe, stay blessed, never stop learning, and keep an open mind. Thanks for listening.